What's up, everybody? Good morning. All right, you guys. Let's see. I'm getting just situated here. I'm on vacation. Not vacation. I'm on a trip. So I'm on my laptop again. We're up to Rocket Scooter front and center. What's up? Good morning. What's up, Red Knight? What's up, Itai? I pronounced that correctly. I never asked. Feel free to like the stream, you guys. Let's get ready to roll here. We start off in about 1 minute. So going refresh here. Oh, what's up, New Age? Forgot to chat with you. Oh dang, I was on. I had to chat with you yesterday. The U-Haul drag was longer than expected. We didn't finally settle down until like 10 o'clock or so. All right, so we'll check the open. Markets rash. We did have a little bit of recovery. That's good. S&P is testing that DD band right at the top. So 39.64 there. 11,600 on NASDAQ. So we consider these tapped. So there's no DD trade today. It's already hit the upper band once. We're looking at resilience is looking nice and steady. So no irrational, maybe possibly to the upside if we get it. Let's run Rocket Scooter for full screen. I think we have a little bit of an update today. Nothing big in the news that I can see. Just pre-market squeezing in the Fed. Just double checking today's news. Solomon, Goldman Sachs are about 8 in job cuts. That's going to happen. We've talked about that for the last couple of months. Companies are going to trim the fat. Can't get around that. Let's talk about this week. Next week we have FOMC on Wednesday. Clearly today, June initial jobless claims. That's the big metric we look at. Or new unemployment to boost company earnings. As they improve the bottom line by laying off their fat, this is getting a little bit better. The internet here might be questionable. I haven't checked it out and checked it out yet. See if it's. Where are we trading? Okay, so we are right at 395. So we're mean burning short up. Okay. No, hold on. That can't be right. Oh, there it is. There it is. I was like, where's the candle? My brain was looking down here. So we are kind of stuck in liquidity pocket already. The market's going to likely reject this and pull back a little bit with res being greater than 0. It's going to be stuck in here. So this is a resilience play. Just want to TQQs real quick. Feel free to smash that like button, you guys, when we're getting started here. I'm eating a burrito from Buc-ee's. If y'all are from Texas or been through Texas, and you've never been through a Buc-ee's, you're missing out on one of life's rare treats. Now, push my Kiki goes out to the December 23rd. So inside of here, this is expected to be a long bounce. But remember, we're bouncing against that doomsday band at the top. So the market's going to have a really hard time moving higher today. Personally, 280 is a load-in spot on Qs. But again, you have that resistance here. So it can get trapped here, it can get trapped here. There's no sell-off below 280. 281.5 is a rally spot. So personally, for a swing, 280 is a good place to cost basis average in on the bull side. Breaking it on the bear side would be the short. It's going to be a tight ranged day today again. Selling credit spreads or condors are the way to go. VIX is not irrational, nothing bad here. But we could have any downside on the markets. VIX hitting 8 could pivot the markets back up. So you have monthly hedge pressure on Qs, VIX hitting 8. Let's run the scanner. Let's see if we get breakouts today. Let's look at the 2 breakdown cases. If there's anything that's showing up there. Nothing on the breakdown side. Okay, let's look at breakups. Nothing on the breakout side either. Check all the bullish ones. All right, some plays today. KMB, GE. So it's a BLU. It went from BSU to BLU, so it is actually just not breaking hedge to the upside. So keep GE on your watch list. So we're looking pretty nice. Starbucks is looking breaky as well. So the scanner's showing some that have moved up and trying to break through hedge pressure. So I keep an eyeball out on this. Right here, 102.5. I have a couple of stocks today. Let's look at Tesla. Is it blurry or is it just you? It could be blurry. The internet here could be kind of. Let me check my stream health really quick. I'm on vacation on my laptop, so it could be getting low bit rate. You can change in YouTube on the bottom right. You can change the resolution on YouTube. You get Tesla seeing a little bit of a kind of open resistance. Wait, where did my resilience go? Gee, resilience added to the chart. Keep an eyeball on that, yeah. So this opening and selling, there's just a little bit of selling pressure on the open of the market. Keep an eyeball out of these resistances here. Yep, there's that selling. It's going to have a hard time rallying from here. We made that determination yesterday when we talked. Actually, I think it was Monday when we talked about it. Both the commitment traders, this is one of the major driving forces for the rally, was on the dealer side. The dealers are positive, right? Their net positions, and now they're back to being negative. So the market's going to have some tumultuousness. So it's going to bounce around for a little bit. The rally is likely going to stop until something else changes. You know, you're getting some buyers here. We're likely entering a wave of selling. So this week and next week could be 1 or 2. You know, as the market's long side gains more momentum, they tend to sell on the way up. And now you have new people shorting. They're covering and buying. So market's a little illiquid to the buy side here, and dealers are now no longer net positive. So it's going to have, anytime the dealers are negative, it's back to business in this bear market. Why is my thing waiting for data? My thinker swim just froze up over here. Okay. Check out Google here. Yeah, so ever since we had that big run up on Friday, right? Just this entire first week, this entire next week, we just had some really nasty selling. Let's keep an eye out for res here. I still think that the market is not going to crash, but it's going to have a hard time rallying. I still think that even with DD right here, we hit that limit already. So it's one of those days where it's going to be really hard to determine what's going to happen. This is one of those ones where we have very low visibility. It's not breaking out. It's not rallying. It's not selling. It's just hanging. It did hit that upper resistance. It's typically what we want to see when you're in the middle. You try to look for those trades until you hit something else. And of course, again, everything's jumbled up on that rocket scooter. So we're not getting any clear S&P signal. Plus, you already passed your liquidity pocket. So you have your random day from here. The random day turns to breakout 395. 396 hits. And again, there's that resistance. And you have that DD, which is about right here. So any break of 396, the market's gonna get a little crazy, but you have another liquidity pocket there. So like the fact that the market's jumbled up inside of here, you just gotta have to pick a direction, go with it. It's gonna be random. So don't expect it to go in one direction. If you get your play to there or to there, take your trades and call it a day. That's how I do it. Stays like this. I personally don't see any short case yet. We're opening above monthly hedge, which is always good news, 387.5. Plus we are, and you guys want to know one thing, we had that kind of when the month started, right? Monthly hedge pressures was way down at 360. And it's interesting that, as that happens, people are thinking that was lower than normal. But normally what happens is monthly hedge pressure will decay into the direct where price is as the month goes by. But you'll see what was neat is that this was the month that we also added Tuesday and Thursday options for 2 weeks out on SPY. So that was a exchange change, right? Once they added those new options, it could be that people were taking these adverse positions or these extraordinary positions just to be ready for that. It's interesting to see like how there was a little potential additional hedging for the additional liquidity or liquidity, who knows? But this could have been an effect of that when it was like 360 a couple weeks ago. Okay. Everybody click that like button real quick if y'all love me. Y'all love the stream. Papa wakes up on vacation. Come over here and still stream for you guys and talk about the market. Help the algo out. Okay, what are you guys trading today? Throw me some tickers. Let's put them up. I'm looking at all the bull setups on the scanner. SE, PPG, MO. MO is looking BSU on hedge pressure, so that is always one of those. Keep an eyeball on that. With stocks that have resilience greater than 0. We talked about yesterday the redistribution zone. So stocks that are following the index, if the index goes higher, you can assume that the stock might have a higher chance of going higher as well. Volume spike discrepancy on the stream or in your house on your computer. I'm on a laptop vacation, so it could be me just being. You just had volume spike on your TV, like from me. Was I shouting? I'm also trying to keep it down because I'm in a house full of people, so I'm whispering. So if I speak up a little louder. But decreasing volume on rocket scooter. I don't know. Can't remember. Okay, so it looks like we're getting a nice resilience bounce here. Pepsi, mean reverting, big large range. There's really not much to say about Pepsi. It looks like it wants to go nowhere and trapped in here, but obviously, when I look at stock like this, I want to swing it instead of trade it. It's a pretty decent drop to hit 180. There could be a 182.5 short if you are a bear. But what I like to do is, if resilience is greater than 0, I start to load up inside of here for like a small position for a swing, like hold at least for a day. So tonight through the next couple days, and then if it does fall, I would dive into the same position but add up to it here. So if I bought some, like for instance, I want to buy calls for some breakout level, go to the functions. We'll do PEP. Right? Let's see if we can find an outside this week target, like 185 is 165 to 180. So there's no pocket or resistance that we haven't passed through yet. So another thing is to go on daily chart and see if we can't find any gap fills. This is upper targets. How you do this. And Pepsi was one I was trading way back at the 180 days. I love Pepsi. This was one of my first ones on the recovery. When we hit that bottom, I took Pepsi to like somewhere up in here. And so you look for those like setups, right? So in instance, 185, 61. If it continues to push, you always look for gap fills to be that next wave up, or gap fills to be the next wave down. So you have one down here as well. So about 185 anyways. And of course, we had the breakout, and then it's a gamble on the Fed. So the Fed will make or break this type of thing. Personally, as far as investing goes, I wouldn't be building into a big position now. I would save most of my capital in the swings to have something now on the table. And then the ability to average in after I see if there's a dip. Oh, volume spike. You meant volume on the platform. Not, I was thinking like volume, like audible volume. Which ticker are you looking at? I thought you meant volume, like I was being loud or something. Hey guys, everybody do me a favor. Smash that like button for a second. I'll be right back. All right, I'm back. Let's see what we got. Discord DM. Grab me some breakfast real quick. Oh, so what you're seeing, Norm? Can you hear me? The candle data that we have for Rocket Scooter, since we're growing, right? We didn't buy all the exchanges. So like, there's, if you add up all the exchanges, like in the Thinkorswim, like they'll have all the exchanges data. It will show all the trades and all the volume. Our candles and our volume are missing some of the trades, a lot of them. It's just a display. So your trading platform will be more correct. That's just because those platforms have hundreds of thousands of subscribers. And so they go out and buy every exchange. We buy some of the American exchanges, not all of them. But they all trade the same. So it's like we're missing a lot of the order flow. But it doesn't matter. It just is a display thing. So volume spike, I guess, now that I thought about that, we didn't think the candle data mattered because everybody voted. We're like, you guys want more expensive data? We're going to work on something else. And everybody was like, we don't really care about the candles. But right, on Rocket Scooter, now that I think about it, that also means some of the volume will not be showing up. Like you'll see the volume will be higher, but you won't see the full spike. That's something for us to consider because now it's a problem if that is not showing all the volume. So essentially, does that make sense? There are a ton of exchanges that a lot of you guys didn't know that exist, but like as we grow and get bigger, we'll be adding more data to our data feeds. So yeah, you'll have a slightly higher volume displayed on like your other platform than ours, but the candles will be the same. The candles might look a little thin, but since it's just a display thing, it doesn't affect any of the calculations whatsoever. It's just what it displays on the chart. Sorry, I'm eating some McDonald's chicken nuggets. I'll tell you something fun. Fun fact. Every time I've ever moved, like there's this like rule of the world that there's always a McDonald's within 5 minutes of you, no matter where you are, right? So anytime I've ever moved, I've always got McDonald's because it's just like you're hungry, you need something. If you want something like salty, you don't care. You just need like some kind of like fatty, greasy, salty food. You're hungry. But I always get like a 20-piece chicken nugget. And I love honey. And I guess it's like when I was a kid, basically the Happy Meals with the honey in it. So we drove a U-Haul from one side of Texas to the other, moving furniture for Nicole's sister. So that was an all-night thing or all-day thing. As soon as we landed, we're like, we're hungry. We're in a McDonald's. Got like 40-piece chicken McNuggets. Dude, there's a McDonald's at the bottom of the ocean in the Arctic. Oh yeah, here's one on the moon. There's like 40-piece chicken McNugget in there, or 220s. And so I was grabbing me some for breakfast. I want the healthiest of foods, but not unhealthy either, I guess. But the honey, I don't know, something nostalgic about it. Like I love all the other sauces. The Szechuan sauce when they had that was good. The sweet and sour, like all of them. But the honey takes me back to my childhood. Or get like a Power Ranger toy in your Happy Meal or some Legos or something. Okay. Let's take a look. Resilience is looking great. It's fine. Today's not a short day. Everything's looking solid. But it's not really breakout rally either. So a little bit of a range. Bringing head short on SPY is a good deal. As I said, there's a bunch of resistances on the way up. It's one of those, you just got to kind of pick a side and stick to it. You're taking the long side here. 1 point stop below hedge pressure, and just kind of your resistance will be 396. And if you pass that, you have another resistance of 397.5. So we already hit through liquidity pocket today, so it's completely random. We know that once you pass to that middle reverting level, 5 minutes in, market's already random. So there's no short case. I don't see anything with resilience possible like that. You guys remember yesterday? Dude, that Szechuan sauce. Oh man. And it got crazy with the Rick and Morty episode came out. People are going nuts for it. That was the one, right? He was like, that where's that Mulan sauce? That special sauce they made when Mulan came out. And everybody was like storming McDonald's, trying to get some. Or they didn't make it anymore. And then like there were people selling like jugs of it on eBay, like from 20, 30 years ago. I don't know if I'm gonna eat that, but maybe. Oh hell yeah. I love Rick and Morty. If you ever meet somebody, hold on, I'm getting sticky from the sunny. I'll be right back. So, you ever go and like, there's like a couple of things. Like if you're a certain kind of person, like certain kind of thing, and you run into somebody that also likes certain kind of thing, you have instant best friend forever. So like, typically you like Rick and Morty, and you meet somebody on the street, and it's like, oh, I love Rick and Morty. You're like instant best friends. There's like a personality type that likes that show. Or if you go to a bar, like a pub or something, or like one of those, what do they call them, like a brewery, and there's like a group of people playing like Settlers of Catan, and you're like, play Settlers of Catan, and you go up and go, no way. You're like, let's exchange numbers, bro, game nights, let's go. You know, Rick and Morty is one of those things too. DD, let's go, baby. We're breaking through top DD on S&P. Take a look at that. Hell yeah. I actually really, really, really like some of the writing in Rick and Morty is just outstanding. Like the Vat of Acid episode was probably one of my favorite episodes of any cartoon in a long time. I used to like, I grew up watching Futurama. It's like my favorite show. Futurama was so well done. But if you saw the Vat of we were hitting the top doomsday band right here. So we hit that irrational spot on the S&P, hit half gap, resilience is greater than 0. So we just bounce, and it looks like it's getting a little bit of a squeeze pre-Fed, and now we're breaking out FOMC. So I don't know. Let's check to see if anything is happening in the news. This is just a little unusual, but let's see if there's anything popping up. We did have, let's talk about the jobless claims. All right, the jobless claims are part of what moves the market to the upside. Everybody speculates that as jobless claims go up on the initial filings, that the FOMC is likely to taper off on their rate hike increases. So I'm expecting a 50 basis point hike instead of 75, which means they're still raising rates, but not as high. And so as you get these trends upward, each time the market has rallied, it's gone hand in hand with these upward bumps in first-time unemployment. So as companies are trimming their fat, you guys have to know that that's just bullish for the company. You lay people off, that aren't producing. The first wave of layoffs is almost always bullish short term. Just imagine, right? Like you laid off an employee, that's a salary you saved, and they're not really doing much. So you're laying off the people that aren't doing much. Oh yeah, the bad asset episode was so great. With the Eric Clapton song, as Morty is going through and using the clicker, which I love that song too. It's just like very very well made, and of course Jerry fucks everything up like always. Always Jerry. I was sad. I was so happy for Rick. I'm for Morty. Damn it, Jerry. Always mess everything up. So we are touching the upper DD. We already touched a pre-market, so there wasn't a trade off of that. This is just randomness, but you do see we do have a hedge pressure break. Markets are rational, pressing at 396. We talked about that today. Market's gonna, after here, it can do anything. I wasn't gonna short it, right? We talked about that. 395 break could go to 396. We said that right when the market open, and then of course it's gonna have some resistance. You're out of the DD band, so it's irrational at this point. So the market's gonna be crazy, and there's just a lot of chop. There's not a clear break point on this until 398. Oh geez. What up, Trav? Let's bring it up. Ice dude, it's funny. I say all G's now. All G's, Rick. Who here watched Futurama? I know if Carson or Fake were here, Fake Pear Bear, we always talk about Futurama. That's one of our favorite shows. Starbucks to 108, let's check it. You just make sure you go to rocketscooter.com. You haven't yet, get the free trial. Emilio, no way, dude. Futurama is like the show. I'm 41. I know you're younger, but when I was like your age, it's like when Futurama was like in its prime, and I was watching it as it came out, and I still watch it almost every other day. And it was like, because The Simpsons was on, Simpsons was getting stale. Futurama came on, and they hired some PhD mathematicians to write for the show. And you know what was it? There's actually a math theory called the Futurama theory. I can't remember if it was with the Globetrotter episode, but it was the one where they were switching the Futurama. There's an actual real mathematical theorem now from the show. It's a math theorem invented by Ken Keeler, the prisoner of Benda, the first known theorem to be created for the sole purpose of entertainment in a TV show. And so it was like this one, and it's now a real math theory, if y'all remember. So they invented this math theory for the show, and it's actually now a real theory. It was one where they were switching minds and switching bodies, and there was the math that, what was it? What were the guys? The Globetrotters. It was the Bubblegum Tate. So like the funny part of the show was that the Harlem Globetrotters were all mathematicians too in the future, and they're all trying to solve this equation on how to get everybody's mind back to their bodies. Oh, the tattoo that Amy had. Oh yeah. I always wondered what it was, because when they showed it, it was fuzzy. Was there ever speculation of what it is? Because y'all looked at it like, ooh. But the joke was the name of it. Starbucks 108. I don't see anything here. Let me go back to a gap fill. Yeah, Travis, talk about this one right here, right? That's the next gap fill in Starbucks. You nailed it. 107.5 and then some. It looked like just like because it was fuzzy when they did it. You couldn't really even make out what kind of shape it was. mRNA is interesting. We've opened and been bring into BSU. Yeah, so 108 is close to a gap fill. Market's moving really solid. Let me check on my stuff here. It's your first day here? Please say, I've never seen a stream before. It's my first day here. What are you guys doing today? Yeah, definitely a short squeeze on SPY pre-FOMC. mRNA is looking like it's ripping pretty good. Get some posts up here. Let's do some breakouts then on the breakout scanner. Okay, so on the way you do breakout scans, let's clear out the strategies, right? Pull that up. Monthly pressure breakup. There are a lot of them. See, there's stocks that have bullish going to bearish. This is a huge deal. Okay, MHP breaks are big, big, big. Morgan Stanley. Right? Some of them are popping up here. AMB, yeah, let me pull it up really quick. So Morgan Stanley, right? This is huge to see these stocks move like this pre-Fed. Like I keep saying, the market is very concerned with these employment numbers. And I love the fact that we can minimize the scanner. They're working on pop-out windows right now for multi-charts. That is amazing. I like this a lot. There's that upper MHP run. Why breaks are so important? Okay. So it goes all hand in hand. All right, so you guys, I'll go through a lesson. I want everybody here to tap that like button super quick. Just smash it. Like, smash your head on it on the keyboard. Let's go to 75 likes, and then we'll do a little lesson here. I mean, I know how many people are present in the stream. I'll give you a little quickie lesson. So, in a nutshell, when people buy and sell stock, or they long stock and short stock. On the other side of the position, there wasn't a buyer or seller easily found. Dealers take an offset position by being the other side of the trade. They buy options to hedge that, and there are people that sell options to them. So the people that sell options to them is where hedge pressure comes from. It's that third part of the chain. The options dealer is the ones upside down options. You sell puts, you sell calls. You are the one that is upside down in an options trade if they go in the money. So you're the one that's acquiring shares and selling shares to make sure you're balanced. Like, for instance, if you sold one call at a strike, say 88, and 88 is at the money, you will need to own 100 shares of that stock for every call you sold, because it can be exercised on you at any time. American style options can be exercised at any point in time. So you will have at least 50 shares if you're delta hedging, because delta would be 5. And as the market continues to rally through 88, like on my screen, you'll continue to accumulate 10 shares for every 0.1 delta. Or if you choose to be fully hedged, that's called delta hedge. And fully hedged means as soon as you hit 88, you have 100 shares. So you can either delta hedge if you are, that's your strategy, or you can fully hedge if that's your strategy. Okay, so essentially option sellers are longing and selling, longing and shorting to make sure they're balancing whatever their risk plan is for selling options. Maybe they want to be delta neutral, maybe they want to be fully hedged. Either way, they're buying and selling. Hedge pressure is the maximum order flow they will experience, that we will experience based on that activity. So an example is if I sold 88 calls and I'm a fully hedged trader, I want to sell them for 100% profit and no hedging. So basically I'm doing nothing, crap, they're in the money. I'm going to buy 100 shares right now. So now I've sold a call and I bought 100 shares. So anybody that exercises that call at this point in time will buy those shares from me because that's what the call gives them the right to do. And I had the 100 shares. So literally I lose very little on that trade. You see that, Tommy? So that's how that chain works, right? It's the option sellers, but I had to buy 100 shares as it goes in the money. So I add an order flow predictably there. And so what we do is we look at, since we can take all the options sold to market makers, we do the maximum amount of delta hedging, which is the most conservative approach, assuming that not everyone's fully hedging, everybody's just delta hedging. So the maximum amount of delta hedging of just options sold to market makers, and it's all of that hedging lumped together in one spot. So all the risk of all the options at all the times just sold to market makers, this is going to be the maximum order flow due to hedging. So when you touch hedge pressure, for instance, you're going to see there will be some volume. Now let me kind of squeeze it off to the side. Anytime you pass through hedge pressure, you will see increased volume because of that activity. So all the options balance right here that are sold just to market makers. Because an example is if like you and me go in there and buy some like 100 Morgan Stanley calls for tomorrow, right? They're basically going to expire worthless. There's no hedging done on them. Delta's so small on those. Nobody's going to be acting on it, right? So these YOLO out of the money options, I can go buy 100,000 of them. And if you're just looking at open interest, you might think that that's important, but really it's not. There's no risk on a trade like that, right? It's almost a guaranteed loss. So in reality, if you look at all the options, it doesn't give you much of anything. But if you look at options just sold to market makers, it's guaranteed they're going to be hedging in some degree. So as our technology can isolate market maker activity from just the general options order flow, that's where Rocket Scooter stands out. We're showing you where market maker activity is. So the bull and bear split, as you see on here. So I zoom in on this. Okay. This is very. Let me scoot this up here. Let me pick a different stock so I do want to watch SPY anyways while we're sitting here. So if you are only looking at market maker options, i.e. options that market makers purchase while you buy or sell the stock so they can hedge against you, the people that sold the stock or sold the options to them are buying and selling the stock to hedge against them. So it's a big triangle between the trader, the market maker, and the insurance salesman, right? So that insurance salesman is going to maximize their activity right through here. So it's all of them together. It's the net sum of all options the market makers do hold that are hedging at all points in time. And so it's the maximum order flow expected. Anytime you touch your hedge pressure, you expect order flow increase, as you see right here. Sometimes a spike, but as you see, the spike went like this and came down, and then it turned into a squeeze as people are getting squeezed out. So when you touch or go through hedge pressure, it is guaranteed order flow spike every single time. And as somebody pointed out this morning, if you look at on like TradingView or another trading platform, you will see the volume spike is much larger. I'll show you right here. Let's just pop up. You can see on the S&P futures, the volume spike is very prominent. On Rocket Scooter, since we buy budget data, full transparency there, you can see there's that massive volume spike right at 9 o'clock. Right? You guys see that? So like, it's a little bit higher on theirs than ours because like I said, we don't buy all the exchanges. So while the shape is still there, it's not necessarily as prominently seen. And that hedge pressure run started about right there. It's about the same, But sometimes you'll see like the spikes in the index will be the same, but like in some of the stocks, you might see like a bigger spike. Not that much bigger, but you can see it's very similar in shape. It goes up and then it continues to flurry up as you get a squeeze. That's a good sign. We're breaking out of doomsday van on both of these. So the market's going to stay nice and irrational for a while, so a little bit choppy. The next step resistance, I think Russell is probably going to connect there. VIX is trading down, so let's watch UVXY very quick. If you guys like this, make sure you go to rocketsphere.com and check out the free trial. There's no credit card required. You just literally sign up. You start playing with the indicators right now. Take a look at the best, newest, most talked about algorithmic trading software on the planet. No technical analysis, no charting, no multi-time frames, no multi-charts, no multi-time frame components. All that stuff we completely eliminate if you're tired of looking at explosive lights and colors on your chart, confusing the hell out of you with lights and sounds, giving you migraines, and causing epilepsy, and trying to make trading where you're doing thousands of complicated steps that only a person with mental instability would want to suffer through to do this as a job. Literally, mentally unstable people would love doing that. I don't. I love simplicity. I love things explainable. I love things to have logic behind them. Not the shape of the chart was this, therefore in the future it's going to look like this because of the shape and color. That just sounds stupid to me. I went to engineering school. Immediately first day out the door, I put technical indicators on my chart that were like moving averages and MACDs, and the first thing I thought was, who believes this? What kind of person actually believes this? There's no mathematical basis to any of this. Like, there's no reason. It just sounds like the stupidest thing that like somebody who spent their whole time working in a world of logic. So we set out to make something new, and instead of trying to use the shape of price with those big fat toddler crayons and drawing on our chart, there's a yellow, and here's a pink, and here's a neon blue, and here's a hot purple, like just drawing all these colors, right? And then trying to figure out, okay, price is going to go here because there's like these guys and these guys, a lot of stuff. It just seemed weird. And so our thing was, instead of trying to use shape and predicting price and where it will go, we're using understanding of how hedging works and how market making works to predict where volume will be. Anytime you interact with any of these levels we give you, they are high volume pivots, predictable from the start of the day. So at 9:30, we tell you these levels. No argument there. As you're passing through half gap, which is the highest volume typically, and hedge pressure, which is the next highest volume pivot outside of open and close, there they are. Anytime you're interacting with this one or this one, there's your volume pivots. You make all your decisions, and this is VIX, at these three pivots. That's it. So all day long, I'll give you a combination of the highest volume pivots there will be. And so let's get QQQ real quick. We set out to do something different, and it's getting a lot of movement in the bear market especially. There's a lot of people that finally realized when it comes to technical analysis, a lot of people got into trading during COVID, and they got sold all these technical systems and junk. And now the people are realizing the scam is up. They're like, I spent so much time. It was always right in the bull market, never could lose. And now they lost all their money in like a month or week span. And they're like, damn, I thought this thing worked. And you realize that none of that stuff works. You have to actually learn how to trade. And that's where it comes down to finding people that will teach you how markets work, and learning and mentoring with people that actually trade. You once followed this clown. He went on and on about drawing colorful yellow, red lines. Yeah, unfollow that guy. And he's joking about us. They are super colorful though. And blue lines too. AMD, yeah. Yeah, you shouldn't follow that guy. That guy's terrible. It's a waste of time. His name was like Matt something. Ugh. You watch a lot of cartoons. Green lines. Bro, look at all those colors. Terrible. Unfollow immediately. You said AMD for a short play. So watching AMD being below monthly, like it fell below monthly and saved itself, you don't usually bet that it goes a second time. Normally, once that hedging settles out, right, here's those volume spikes here at hedge and half gap, and here when you kind of break through it the first time, you have to look for when you get there and there's no volume. We talked about this yesterday at half gap lesson, when you get to these levels and there's no more volume, right here, when you're interacting with it, there's no more volume spike, meaning no more hedging takes place, then what you have to assume is that whatever side you're on is going to continue to maintain the drift. So we talked about that before. So right now, looks like AMD's redistribution zone is very small. I mean, it's like a razor thin line. It opened and closed at the same spot pretty much. And so you're now outside the redistribution zone on AMD with no volume. This is like more likely a long play than a short play to go to there. It's a bear short up as well, and you're supporting monthly hedge. So I personally would scout from here to here on AMD, which is great. It's great to find stocks that are looking good like that. Now again, as long as resilience stays greater than 0, you have a stop right below here. I'm just going to use this to draw on the chart. Yeah. Resilience is greater than 0 is going to show that the S&P is likely. Right. So while this is just the S&P, it shows the S&P has no weakness. This has no volume. Volume is in decline, right? Decline volume. Anytime volume's in decline, that's the trick. When you're declining volume, whatever side you're on just maintains the drift and keeps going. So to me, the play is to there. If there is a short play, I always short off of something. So if I was bearish AMD, right, the short would have been against that, and I would be working off of that play. Now, inside of here, I don't randomly short. I would take a short if you lose monthly hedge pressure on the downside. That's how I take those shorts. So, right there. So this is a short play on that break. If that makes any sense. So remember, my rules are I only short off of monthly hedge from the bottom. And I only short against hedge pressure from the top. If I short. And I actually, I only short monthly hedge pressure from the bottom. The only liquidity map short is hedge pressure from the top. I don't take that one though either. I don't like to short whenever you have stocks above monthly. So while this BRSU has that leg that goes like this and this, I normally don't take that short. But if you are adventurous, it doesn't mean it doesn't work. It means I don't like to tie up money into short scalps when I can actually tie up that money into a long breakout. Long trades always pay off more than short trades, especially when it comes to options. So I'm always, and there's a reason people are always like, why do you not try to find short plays? And it's because short trades come in periods of higher volatility, and your puts will decay premium very fast on a volatility crunch, less than your calls will decay premium on lack of volatility as it's decaying. So like statistically, in bear markets, long bear market rallies are the best gains you get in options, with all the Greeks favorable to the long side for bigger runs. Sell-offs are very short-lived, so you're holding for longer to get the sell-off you want. In a bear market, like you're just holding for weeks at a time to get that one really strong red day. So you have to tie up your money for like, your 100, 200% gain that you're looking for. When in reality, scalping to the long side is something that you can do on a day-to-day basis. And those breakouts to the long side are more powerful in a bear market than they are even in a bull market, right? So I don't like to tie up my money in a small scalp to the downside. I like to only find scalps to the upside, and I'll take the shorts that are like against monthly from the bottom. Those are the ones I will take. So this particular one has that certain pressure. When I look at these BRSUs, I look to exit longs right here to let it relax. Does that make sense? So while the long plate is going to 71.5, right, I'm not necessarily shorting any time before there if I was going to. And when it gets there, I don't like to short, just because this one is going to go at 1.5 on 7. That's 2.5 over 285, 28.5%. Sorry, 2.58%. No math there in my head. 2% draw. It's not a terrible trade, I guess, but everything is moving very positively today. So trade is certainly on the long side. All right. Still watching AMD, looking at 71.5 run SPY. Check out the SPY QQQs. Let me double check. You might need to refresh your platform, but hold on. You said, what is it? NVIDIA? It's, it should be bouncing BLU. You should be good. I would refresh your platform. I'm not really sure what you're experiencing. Could be some kind of anomaly. It's certainly correct on mine. Just hit F5. You get something, you could have like a connectivity with the server or something, and you're getting delayed signal. So just hit F5. You should be good. Right. NVIDIA's looking really nice too for a breakout. For this breakout on monthly. Ooh, that NVIDIA is going pretty well. I like it. I like what it's doing. So when I get back next week, we're going to start a brand new format of the show. It's going to be all different. Be doing some futures trading on top of the options trading. We're going to be launching a couple new features like for the platform. We're going to start working on monthly maps next week to get those out in a couple weeks. And you guys are excited to see that. We're going to have guests on the show on a daily basis. We're sponsoring a major podcast now, so you're going to start seeing a lot of a lot of things. We're going to have a weekly live trading session with some big name traders through Twitter and other places. And so our schedule is just going to fill up. It's going to be different content, not just streaming on YouTube anymore. So you'll probably be seeing us everywhere all day long. So you'll be able to get your rock scooter fix morning, noon, and night. And of course, if you guys are in other communities are also going to be featuring our stuff as well. Trader8 is awesome, dude. I love Trader8. One thing I'm fascinated is that stat where SPY opens above hedge pressure, stay above hedge pressure. Yeah, 89% of the time was the back test when we did it a couple years ago. So the number, yeah, and that was over a period of time. So 96% was the bull wall. Like bull side would say bull side, bear side would say bear side, as long as the market's rational. And the hedge pressure, again, was 89%. It would stay on one side. If it's on the north side, 89% of the time it'd stay on the north side. Very good stats. So that opening, that's why LMO was so important when we first started, because that opening condition was probabilistically where you ended up. We probably have to do like an advanced video to cover that. And when the platform advances with some of the strats that we're going to automate in there, it would tell you that probability based on LMO, which we don't really talk about that much anymore. We're usually just looking at the current liquidity map. But LMO is very powerful because of that statistic alone. So I agree. So price opens in a call zone, you expect price to go up till the edge of the call zone. No, Tommy. The zone it's the boundary of the zone that matters. You don't expect it to go up anywhere. You expect it to stay in the call zone, period. That's what you expect. Where it goes inside of that is completely kind of random, but you bet that it doesn't go lower. You look for the next resistance. So whether it's a put wall, red line gap fills, whatever, you look for the next resistance is where you want it to go when planning a trade. So the top of the call zone is irrelevant. As a matter of fact, the top of the call zone wouldn't be the end in that strategy. You would continue to look higher for the next put wall above the call zone where the market has an illiquidity pocket, or we call like what do they call exhaustion run. An example here, we pretend that monthly hedge pressure is in there and NVIDIA is rallying from there. And pretend none of this is here. It's just NVIDIA hits a bounce and it's going, and all you see is this call wall, these put walls here. The final squeeze point is the illiquidity pocket, is where when you break out of the call zone, you rapidly ramp up to the other side. So it's the opposite of mean reversion, where the middle is the key. When put zone is above call zone right there, bear zone is above bull zone, for instance, the market does not have liquidity in here. You have bulls and bears both upside down at the same time. It rapidly runs across the channel. So this is one where, as an example of illiquidity pockets, IPs, when you go in the middle like this, it rapidly runs to the other side. You see how that works? So you wouldn't consider, now this moved on hedge pressure alone, but if hedge pressure wasn't there, it's the same mechanic. The market has a zero resistance in here. It's like there's nothing in the way. So you'd actually would plan not the top of the call zone in that particular instance if there were no resistances elsewhere. You would actually use the bottom of the bear zone if there is one. That's why we always look for put walls to be that resistance, especially like in the monthly analysis, right? When we're looking for monthly resistances, why do you think we always look for that exhaustion run? Like inside of here. Wait, no, that's not upside down. Let's do SPY really quick. Or let's do QQQ. So you use the put boundary on the other side, because that's where it'll run through and exhaust there. An example is if QQQ keeps going today, which it likely is not going to, pretend there's some put walls here. So you wouldn't target this as the final resistance, because this is bullish and this is hella bullish up here. If there were put walls on the other side. So you had like put walls over here, right? If this is a put zone, the market has no liquidity inside of here. You have all the bulls in the money and all the bears also in the money. So the volatility actually goes really high right here. The market rapidly moves very quick. And on the, or I guess in this side, in this case, the volatility would come down probably. But you're squeezing out shorts for the most part. These puts here, people will rapidly, those bears will likely rapidly close their positions because there is no liquidity. In the middle of here, bears and bulls are upside down if there was one. So you actually use the put side. Yeah. But great question. Let me check on my trades here. I roll my Googles out to the December 23rd. Let's double check Google real quick. Today, Rocket Scooter saved you from a pretty bad trade. You're going to open BCS on SPY. But looking at the Rocket Scooter, I realized it wasn't a good idea. Nice. Yeah, so as Google's been dipping, I close out my hundreds right when they get close to the money. Back here. And I've been averaging into December 23rd. Just give me some more time. So I'm betting like post-Fed that we continue to go. Yeah. Hey guys, getting close to calling it a morning. If you have any questions for me before we get out of here, make sure you guys go to rocketscooter.com. Try out the free trial. You will not be disappointed. Next gen software. 15 indicators. They all predict volume. About to come out with the monthly map, which is a monthly options trading planner. You guys will really, really, really love that. Being a lot more information on the platform for you guys, automating a lot more stuff. And so we're excited to share this with you. So see you guys all next week. Go to our Discord. Put the link in here in this chat. Click it. Go over there. We'll be there for the rest of the day. I'm going to get back to doing some stuff. We're here on some vacation. Not really vacation. We're for a baby shower. And then we drove some furniture up here. So we're just kind of helping out fam and working. So I'll be around to help you guys out. And if you guys need anything else, let me know. Go to that Discord. Go to Rocket Scooter, free trial. Check it out. Check out our platform. We are the new, next, best, biggest thing for the retail trading world. Fully new technology, new invention, new style of trading that you've never seen before. We get rid of all the junk that used to clutter your charts. Check out Dow. Okay. Can I check out Dow? You're trying to really catch it before I leave, huh? Dow K. Jones. That'd be a cool thing to name yourself if your last name was Jones. My name is Dow K. Jones. Sounds professional. Your Dow Jones is in this, we call it mean reversion. It's kind of sandwiched in between a bunch of stuff. There's really no discerning of the Dow. What I would do is I would follow the SPY today. The Dow itself is going to tether and mimic what you see in the other indices. So being less actionable because it's stuck between a bunch of wide range of stuff. I would just continue to watch the SPY and pivot everything off of the SPY MK. Okay, we'll see y'all later. Have a good day. I'll see you on Discord. Go over there. Okay, bye.